Welcome to the Deep Dive, your shortcut to being well-informed. Today is a truly pivotal day in Thailand. The vote for a new prime minister is actually underway right now. And while all signs seem to be pointing towards Mr. Anutin likely taking the premiership. So for you, our listener, the big question is, what does this actually mean for the economy, and maybe more specifically, which sectors and stocks are poised to, see some movement? I've done the heavy lifting, sifting through quite a stack of sources, political analyses, sharp market insights, detailed brokerage reports. Our mission for this deep dive is pretty clear. We're connecting the dots. Between this really significant political development and the potential ripples across the Thai stock market, we want to ensure you walk away with a crystal clear understanding of what's unfolding.
Exactly. And we'll start by dissecting the political landscape. We need to explore the key factors contributing to Mr. Newton's likely victory. Then we'll dive deep into the distinct economic paths his administration might pursue. That's absolutely critical for understanding the long-term outlook. And finally, we'll pinpoint specific sectors and individual companies that stand to be most impacted, hopefully giving you a clearer, more actionable view of the investment landscape ahead.
Okay, let's unpack this political puzzle then. The core event is today's Prime Minister vote, September 5, 2025. There's a lot of chatter, and the situation's been described as hot and complex, even one day, 1,000 events. So what exactly is making Mr. Newton's victory seem so probable, even amidst all this, dynamic backdrop?
Well, the most significant factor really is the explicit political support he's managed to garner. The People's Party, often known by its Thai acronym Porchor Nor, has formally declared its backing for Mr. Anutin. He leads the Boomja Thai Party, of course. And this declaration comes with a pretty strong expectation that he'll secure around 300 votes.
300 votes. Okay.
Which is a decisive majority, It's a powerful endorsement in this context.
That sounds like a fairly clear path. But, well, as we often see in politics, support rarely comes without conditions, right? What exactly are the critical conditions being tied to this support? And how might they shape the next 4 months of governance?
You hit on a crucial point there. No, this isn't unconditional support at all. The People's Party has laid out some very specific terms. They include a commitment to a constitutional amendment.
Okay.
The dissolution of parliament within 4 months.
4 months, wow.
And a pledge not to increase the number of MPs just to form a majority government. And critically, the People's Party also intends to remain in opposition. These aren't just, minor footnotes.
Yeah.
They're foundational demands that will really define the early days of his leadership.
Those are some serious demands. So while this level of political clarity might bring some immediate, maybe relief to the markets?
Yeah, perhaps.
What are the inherent risks that these conditions introduce, especially thinking about long-term stability?
Well, while immediate clarity is usually welcomed, you're right, these conditions also introduce a unique set of risks. The prospect of forming a minority government, or even just a short-term caretaker government, for only 4 months before dissolving parliament.
Right.
That creates a potential for instability. It raises a really important question. How will Mr. Anutin balance the need for immediate action with the challenge of long-term governance under such, tight constraints? The market hates uncertainty, as you know. And while this brings some immediate answers, it definitely flags potential future turbulence.
It certainly sounds like a tightrope walk. And zooming out just a bit, we're also hearing that a new cabinet is expected to include technocrats, in crucial ministries like finance, commerce, energy, foreign affairs. What does bringing in these expert, sort of non-political figures signal, particularly to foreign investors?
Bringing in technocrats is a powerful signal, especially to international markets, It suggests a commitment to expertise and practical, data-driven solutions over purely political appointments.
Right.
For foreign investors, it can translate to increased confidence in the government's ability to manage the economy competently, address complex issues, potentially boosting foreign direct investment down the line. It's definitely a move aimed squarely at rebuilding trust and projecting stability.
Okay, so let's assume he's in office. What does this all mean for the economy? According to Dr. Suvinay Fornavalai, he's an economist, former lecturer at Thammasat University. Mr. Anutin faces 3 distinct economic paths. 3 paths he must choose from within the next 4 months. This sounds like a critical crossroads, and for you, the listener, understanding these choices seems, paramount.
It truly is. Dr. Suvinay outlines these paths with striking clarity. Each have very different implications. The first is the populist path. He describes it as easy and sweet, but only in the short term. This involves distributing money, accumulating debt, essentially buying time without tackling the deep-seated structural issues. And while it might offer immediate popularity, Dr. Suvinay warns the long-term cost is, well, potentially national ruin.
Ruin. That's strong.
Marked by surging public debt, fiscal deterioration, and a complete loss of investor credibility. Anutin, in this scenario, would be seen simply as a PM distributing bananas.
That distributing bananas metaphor certainly paints a vivid picture. Short-term gain for long-term pain, essentially. But, some might argue that in politically unstable times, maybe such measures can act as a necessary balm. Is there any merit to that, or is it purely a slippery slope?
That's a fair question. And look, while populist measures can offer temporary relief or maybe boost sentiment, the economist's concern here is about the repeated reliance on them, which ultimately leads to a debt trap scenario. Historically, this causes capital flight, significantly devalues domestic assets, and triggers a loss of confidence that's just incredibly hard to regain. So for investors, this path is a major red flag. It signals fundamental economic weakness.
Okay, so that's the populist approach. Not ideal long-term. What's the second option Mr. Newton could pursue?
The second is the free market path. This approach is all about reducing government intervention, letting market mechanisms drive growth through investment and competition. Now, while it might be lauded by certain financial circles, Dr. Suvinay cautions that it could disproportionately benefit large capital and foreign entities, potentially suppressing small, medium enterprises, SMEs, and exacerbating economic inequality. He likens it to unleashing the tiger.
Unleashing the tiger.
Yeah. There's potential for fierce economic growth, sure, but also for considerable imbalance, harm to the grassroots economy if it's not carefully managed.
Okay, so path 1, distributing bananas. Path 2, unleashing the tiger. What's the third option? You said maybe the most challenging, but perhaps aiming for a truly sustainable future.
Exactly. The third is a structural economic reform path. Dr. Suvinay calls this the difficult but truly sustainable path. This demands immense vision and, frankly, political courage. It involves ambitious measures like comprehensive tax reform, leveraging AI to integrate the underground economy, creating a time market platform specifically designed to protect SMEs from monopolies, and setting a new economic roadmap that's less reliant on those populist measures we just talked about.
Right.
This path aims for genuine long-term stability and a stronger, more equitable foundation for the entire country.
That structural reform path, it sounds like it could be the most impactful in the long run.
Definitely. However, it's also likely the least flashy in the short term, isn't it? And could face significant opposition from both large vested interests and maybe the existing bureaucracy.
Absolutely.
For an incoming government, especially one facing these potential short-term constraints we mentioned, how feasible is it really to tackle such deep-rooted issues? That's the crux of the challenge, isn't it? This path wouldn't offer quick wins, no doubt about it, and any leader choosing it would likely face intense criticism, resistance from those whose established interests are challenged. However, the economist suggests that if Mr. Anutin does choose this path, he would be remembered, not just as a temporary leader, but as one who, quote, created the longest footprint, a legacy builder. And on a related note, a stable government could also swiftly address other urgent national issues, like the Thai-Cambodian border situation, which is currently largely managed by the military, and crucial trade tariffs with the U.S. This kind of stability lets the country focus on significant strategic challenges rather than getting bogged down in day-to-day political maneuvering.
Okay, given these political shifts, the potential economic choices, let's get down to brass tacks for our listeners. Which sectors and specific companies are likely to see movement? This is where many of you are looking for those actionable insights, I suspect.
Absolutely. Let's look at some potential areas. First, direct beneficiaries from political clarity and maybe some immediate spending. Think consumer and retail plays. Consider CPAL.
Especially with its resilient Q2 earnings, and the Q3 outlook seems decent.
Okay, CPAL.
BJC and CRC are also in this category. Then, for construction and infrastructure, if Anutin's government actually pushes big projects.
Which is a big if, maybe, given the short time frame.
Well, yes, but if they signal intent, look at Sticon. It's already showing technical signs of a potential breakout, and it was specifically recommended by Bolong Securities if Anutin becomes PM, so it's kind of bellwether for any build intentions.
Interesting. Sticon.
Another interesting one is AMA. also recommended by Bulawaong. It's a logistics company that has notably declared its intention to join the anti-corruption organization,
Oh, okay.
which signals a commitment to good governance that, investors often appreciate. Right, that ESG angle. So we're talking companies that benefit from consumer spending, potential infrastructure. What about areas maybe tied to those deeper reforms you mentioned? Less obvious, perhaps.
Yeah, that's where it gets really interesting, potentially. If Mr. Anutin does embrace the structural economic reform path,
The difficult one.
the difficult one, yes, particularly with initiatives like AI for tax reform, that could create entirely new opportunities. Think about IT solution providers, maybe other tech-adjacent industries that could directly support that kind of government-led digital transformation.
Ah, okay.
This isn't just about broad sectors, it's about the granular details of policy potentially opening up new investment landscapes. Beyond that, renewed foreign direct investment confidence, if it materializes, could benefit industrial states like Amata and WHA.
Right, FDI beneficiaries.
And Amata has also shown high program trading activity recently, which suggests large institutions are actively trading it.
Got it. Okay, let's zoom out then to the broader market picture. What's the general sentiment and what overall trends should you, the listener, be watching as these political and economic currents develop?
Well, the immediate reaction to the increased political clarity was somewhat positive, I'd say. Tentative, maybe. On September 3rd, the SET index saw a modest gain, 0.84%. And interestingly, foreign investors were actually net buyers that day.
Okay, some initial confidence then.
Some initial confidence, yes. But looking ahead, the market under Mr. Newton's premiership is widely anticipated to experience wider fluctuations, possibly swinging within quite a broad range, maybe 1,155 to 1,400 points.
Wow, that's a big range.
It is. And this isn't just noise. It reflects a market that's deeply divided, or at least uncertain, reflecting the higher perceived risk associated with that potentially unstable minority government or the short 4-month term. This really signals that investors will need a highly agile strategy, perhaps capitalizing on short-term technical bounces while staying pretty cautious on longer-term plays until clearer policy emerges.
So, a bit of a roller coaster ride, potentially. Agility is key. What are the main limiting factors for this market going forward? And what's the global backdrop influencing things?
Indeed, roller coaster could be an apt description. Limiting factors likely include a potential wait-and-see approach from government agencies, which could slow down policy implementation. Couple that with a likely lack of major economic stimulus measures, at least initially, and consumer and business confidence could remain somewhat subdued.
Makes sense.
As for the global picture, well, U.S. markets showed some strength in tech recently, driven by hopes of a Federal Reserve interest rate cut in September, thanks to weaker-than-expected job data over there. Meanwhile, gold prices have surged to an all-time high, also fueled by these global rate cut expectations. So you see investors looking for safe havens globally.
Right, risk-off sentiment.
Exactly. These international currents will certainly play a role in how local sentiment translates into actual market action here.
And just quickly, from a purely technical standpoint, what are the charts telling us about the SET index right now? Any key levels?
Yeah, technically the SET index is showing some signs of recovery.
Yeah.
It's trading above its short-term exponential moving averages, the EMAs, which are key trend indicators.
Okay.
Its RSI and MACD indicators, which are basically momentum signals, are also improving, suggesting maybe increasing buying interest. Key support levels, price floors where buying might kick in, are around 1,250 and 1,240 points. Conversely, resistance levels, the ceilings the market needs to break through, sit around 1,270 and 1,280 points.
Okay.
So there's some technical resilience there, definitely. But the broader political narrative still looms very, very large.
So if we connect this all back to the bigger picture, while the clearer path to a new prime minister brings some immediate, maybe cautious relief, the very structure of this potential new government suggests a more volatile, perhaps cautious period ahead for the market. This raises an important question for you, the listener, navigating this environment. How will you balance these immediate signals of political clarity with the longer-term implications, potential governmental instability or those ambitious yet challenging economic reforms? What's your play here? And as we wrap up this deep dive, maybe consider this. If Mr. Anutin does choose that challenging path of structural economic reform, even with the backdrop of potentially short-lived or minority government, could this fundamental commitment to change, from AI-driven tax reform to bolstering local SMEs, could it truly lay the groundwork for Thailand's next era of sustained growth? Could it override the immediate political headwinds we've discussed? Something to think about.